Good morning. Good morning. Today I'm going to show you a really cool strategy. This is specifically more for like longer term accounts, such as IRAs, 401ks, even just, you know, extra accounts you may have that are more tailored for long term. Basically, I read this in a book once, but I'm just going to show you guys in the most simple way. But the strategy I do it on QQQ, you could do it on SPY or I guess maybe IWM or DIA, but QQQ is kind of the one I like to do it because QQQ has almost like a 14% year over year growth on average, whereas like SPY only has like 10, 11, or 12%. So you get a little more oomph on QQQ. But basically, the way it works is you're going to pull up the 100-day and 200-day. You're just going to turn the 100-day off. So just the 200-day actually. And basically, all you're going to do is every 30 days, you're going to buy. I'm just going to do this real quick. You're going to buy $500. So buy 500 of QQQ. Okay? I'm going to make this a little smaller. And I'm just going to put this on. You can see down here you have the, let me just pull this up for a second. Down here you see we have the month markers, okay? At the bottom of your screen. So just, I'm referring to these down here, November, December. So I'm just going to make a bunch of these real quick. Copy paste. So I will put these at the month markers for you guys. So you kind of get the picture here. So basically what you're going to do is every month you're going to buy $500 of QQQ, which you're just dollar cost averaging, right? So you buy some here, you buy some here, you buy some here, you buy some here. And then here, specifically, this is where the strategy gets a little more complicated, is right here when we close below the 200-day, you're going to sell all your QQQ, go to cash, okay? But still add $500 of cash to your account, okay? And then April, you're basically just adding $500 of cash to the account. And then when you get back over the 200, when you close back over it, buy back all your QQQ with all your cash too that's sitting in the account. And then you're back to buying 500 of QQQ every month, okay? So that's what you're going to do. And the powerful thing about this strategy, so you see it doesn't really matter here because when we closed under it here, when you got back in, it's basically at the same level. But the theory is that when you run into something like this, like we had in 2022, you would avoid, so let's say we closed here, right? We closed under it. And then you wouldn't get back in until around here. You avoid this whole 20% drop, but you're still adding cash the whole time. So you avoid these big bear market drops, which is so powerful. Now, since then, you'd be in the whole time. Now, sometimes you are going to, like, I call it just getting chopped around a little bit. Like right here on this day, right, we closed above it. So you would get all the way back into your QQQ, but then the next day you'd get out. So it's kind of like, that's kind of annoying. You know, you kind of get hosed right here with 4%. Right here, same thing. You would have gotten hosed with 1%. But in general, you're missing the big down sections, okay? Another thing I like to do is anytime we get near the 200, so I'll give you an example. Let's use this as an example right here. We got near the 200. Instead of putting in 500, I'll put in 1,000, okay? So you're just adding a little more near it. Same thing here. We got near it. We didn't close below it. So I'd add 1,000 there. And this is just it's just a better way of DCAing, dollar cost averaging. And at some point down the road, we are going to experience, let me find an example, a time period where we go under let me just go back to like 2008 for a second. We're going to experience a time period where we do go under that 200 for a while. Like right here, you avoid a 26% drop in your account. Let's go to .com. This is the .com crash. I mean, we're talking, you're avoiding 72% drawdown in your account. And it's not just drawdown, like you're avoiding this whole drop. So like when you get back in, I mean, if you do this over the course of 10, 20, 30 years, like your account will be significantly bigger than someone who just does a regular DCA. So I hope you enjoyed this strategy. It's what I do in my accounts. I find it to be pretty awesome, pretty powerful. Like I said, sometimes you are going to get chopped around a little bit. You know, like right here, we close below it, we close above it. Like, you know, we close above it, below it. So there are going to be times when you do kind of lose a little bit doing the strategy. No strategy is perfect, but you can tailor it how you want. You know, maybe you want to do, okay, I only get out if it's like 2 days below the 200 or 2 days above or 3 days below or 3 days above. It's up to you how you want to kind of adjust it. But I've found that this strategy has really helped me grow my account consistently. And the 200 day is just a way, it's a marker to know if I should be in or be out of the market. So hope you enjoyed this. Hope you can integrate this into some of your long terms. Totally optional. Obviously not like an official strategy, but just what I do. And I thought you guys enjoyed that. So have a blessed week.